What's up, YouTube? My name is Chris, and I'm the Mortgage Millennial. If you're new to this channel, I'm a loan originator licensed in the state of Florida. And if you have no idea what a loan originator is, it's basically someone that helps you qualify for a mortgage, whether that be a residential or as an investment. Now, if you are a loan originator, you know we do a lot more than just that. But for now, let's just go with it. My goal in this channel is to educate those of you who are looking into buying into real estate as a home or an investment property, and you want to learn the same manner that I learned, and I'm still learning in this industry. In today's video, we're going to discuss a common question that me and a lot of my colleagues and lender friends get from our clients. And that question is, should I get an FHA loan? Now, it would be nice to just say yes or no to that question and save you the long explanation. But unfortunately, this type of question is complex and deserves a complex response. Luckily, once you watch this video, you'll know everything you need to know about the FHA loan programs and whether or not you should get yourself into an FHA loan or a different loan program. So make sure you watch all the way through so you don't miss out on any of the important details. So before we get into whether or not you should get an FHA loan, we need to have a better understanding of what an FHA loan is. Now, FHA stands for Federal Housing Administration, and they're the part of the U.S. Department of Housing and Urban Development, or the HUD, which is basically a branch of the government. The FHA programs came about in about 1934 with the intentions of making home ownership more common at a time where I think maybe like 1 out of 10 of Americans owned a home, compared to now where 6 in every 10 American own homes. Now, a common misconception is that the government lends you the money for a mortgage, when in fact they actually don't. An FHA approved lender is the one that lends you the money. The FHA, or the government, is the one that charges you the fee that you call mortgage insurance. And mortgage insurance is basically a monthly fee from the FHA that ensures that the lending company will get their money back if you default on the loan or you stop paying off the mortgage. Now, the amount of the fee varies, so I'll just go over that with you now. The FHA charges you 2 types of mortgage insurance: upfront mortgage insurance premium and annual mortgage insurance premium. Now, no matter what your credit is or your loan amount, the fee that you pay for this upfront mortgage insurance is going to be 1.75% of the loan amount. Meaning, if you bought a home for maybe $100,000, you're most likely going to be charged about $1,750, which is 1.75% of $100,000. As far as annual mortgage insurance premium, the fee varies from about 0.45% to 1.05%, just depending on your down payment and the loan amount and term. Now that you have a better understanding on what the FHA is, let's talk about some of the guidelines to actually qualify for an FHA loan. Because the FHA backs your mortgage from your lender, they set some restrictions for the type of risk they accept from you as a borrower. The FHA sets their restrictions, and sometimes the lender does as well. And when the lender sets their own restrictions on top of the FHA, we call these overlays. So if you ever get yourself in a situation where you don't qualify for a lender, ask them if they have any overlays, and if so, maybe you'll be able to qualify for another company. The first restriction is credit. The FHA allows credit to be as low as 500. You're going to end up paying a down payment of at least 10%. But if you want to get yourself in a situation where you pay a down payment as low as maybe 3.5%, you'd have to have a credit score of at least 580. The next category is going to be your debt to income. Now, keep in mind, I said debt to income. A lot of people ask questions like, how much money do I need to make to qualify for a mortgage? But there's no set number. That's too complicated. You have to have an understanding of what your debt to income ratio is. And to calculate your debt to income, you basically add all of your total monthly debt, basically everything that's on your credit. If you have any student loans, make sure you calculate 0.5% of your loan balance, and that's going to be considered your monthly payment, even if you're not paying off any student loans right now. The total of whatever you get, go ahead and divide that by your gross monthly income. Now, the number you get here, convert into a percentage, and the highest that number can be is going to be 56.99 for most lenders, but it can be lower depending if the lender has any overlays. The next restriction for the FHA is the person on the loan has to be living in the home as a primary residence. Now, there is a way you can use the FHA loan as an investment property, and I went over that in some of my past videos. I'll leave a card above so you can check that out if that was something that you're looking to achieve. Now, as far as employment, with FHA loans, you have to have at least 2 years of employment history. It doesn't have to be within the same company, but it does have to be in the same industry. The next restriction that FHA is going to have is going to be based off the loan amount. It's going to be the maximum amount that you can borrow for a home in your average county. And that number is going to be about $356,362 for a single family unit. For a duplex, it's going to be about $456,275. For a triplex, it's going to be about $551,500. And then for a fourplex, it's going to be $685,400. Now, if your city's in a high cost area, you may be able to go above those restrictions. Now, I'll leave a link to all the restrictions in the description down below. Now, for the FHA, there's about 5 types of loans that you can actually get from them. The first one is going to be the one that we just discussed, the basic home mortgage loan. The second one is actually going to be 203K rehab mortgage, which you can use if you want to buy a home and finance both the home and the renovations. The third is going to be the CP, or construction to permanent loan, where you can finance the construction of the home and the land as well. The fourth is going to be the title property improvement loan, where you can actually take out a loan to repair an existing home. And then the final one is going to be the energy efficient mortgage, where you can borrow money for energy upgrades during your home purchase or refinance. Now, the reason I mentioned all five is because, remember, I told you the goal in the FHA is to make home ownership available for all types of people. So they do this by having multiple options. Now, to answer the question that you all been waiting for is whether you should or should not get an FHA loan. The answer is obviously going to be unique, and it's going to depend on the person and the situation. But it's going to most likely come down to your answer to these questions. How long do you actually plan on living in the home? Remember, FHA carries mortgage insurance for the lifetime of the loan. Or in some cases, if you put a higher down payment, it's going to be 11 years. But that can add up. What interest rate you qualify for. It's going to be important because the FHA usually has lower interest rates than conventional loans, but it does have that mortgage insurance. So whichever one outweighs the other, you may want to go in the other direction. That's why it's always important to get a quote for an FHA loan and a conventional loan. Because if you see a huge difference in your interest rate, meaning that the FHA loan is a lot lower than the conventional loan interest rate, which usually happens if your credit is not too good, you may end up being better off getting a FHA loan because you'll save more on interest. How long do you actually plan on living in a home? The average person lives in a home for about 8 to 10 years. And if you plan on living in a home for shorter than that, going to FHA may be the better option because FHA tends to be cheaper up front than conventional loans. What can you actually qualify for? Remember, it's going to be based off the categories I mentioned earlier in the video: credit, debt to income, and employment history. The FHA tends to be more lenient when it comes to these categories. So if you know your situation that you're in is kind of complex, the FHA might be your best bet. All in all, these are some of the questions you need to ask yourself, or better yet, ask your lender so they can price every scenario for you. Not every lender does this for their clients. They should, but it's up to you to actually put the pressure on your mortgage lender to answer these types of questions for you and build scenarios that put you in the best predicament. Now, if they're not doing these types of things, it's up to you to do one of two things: switch lenders or educate yourself. That'll be all for this video. By the way, if you're located in any of the states that I'm going to bring on the screen and you want to work with me as your mortgage lender, please feel free to reach out. My number is going to be listed in there as well. Just shoot me a text of your name and where you're from, and I'll get back to you as soon as I can. Thank you for watching all the way through. Don't forget to hit that subscribe button and give me a thumbs up. See you guys in the next video.